Hi, everybody. Welcome back to The Next Decade. My name is John Egan. We're going to have a 30-minute conversation today with Leda Glyptis about the next decade. Leda is a former Sapient, BNY Mellon, QNB, 11FS exec who has a PhD in political science from LSE and a BA from Cambridge. Did I get all of that?
That's about right.
Brilliant. Brilliant. Okay. So thank you very, very much for joining me today. I'm really looking forward to this. We've had many of these conversations offline, so it's nice to kind of record one for posterity, I think, as well, to have one to keep. So I wanted to chat to you about a couple of things today. First and foremost, the whole premise of this whatever it is, podcast, vidcast, is that we stand on the precipice of a decade of extraordinary change. One that we see every half century or so. And we can see some of the beginnings of that when we look at the global pandemic, geopolitical tumult, etc., and technology as well. Are the things that you're seeing right now that you're looking at and saying, well, this is a harbinger of something significant? You might not necessarily know what it is yet, but are there things you're thinking like, this is significant?
So first of all, thank you very much for having me on. As I've said to you before, every time we have a conversation, I get smarter. So I don't know what the audience will make of this, but I'm going to enjoy it immensely. I've been thinking about the topic ever since you invited me to come on this. And even though every time we look around, we see a lot of things that we either fear or hope will be harbingers of great change. One of the things I have been reflecting on in the last few months, and you and I have already spoken about, is less the things that indicate the change to come, and more the things that indicate that the change we've been resisting can be resisted no longer. I think particularly in our industry, but more widely, we've tried to manage and sort of choreograph the change that certain technological maturity has brought. So the combination of a certain type of technology maturing, the combination of a certain type of geopolitical situation accelerating has very much given a tone to the last decade that we have largely tried to control. So it's a very meandering way of saying what I'm seeing around me is an indication that we can't control any of this anymore. And what will happen before whatever colors the next decade is a consolidation of all the things we've been trying to minimize or manage. Everything from population movements to, the radically transformative impact of the technologies we all work with on a day-to-day basis. And for me, it's those two things: digesting the way that technology changes our power dynamics between institutions, organizations, industries, and the way population movements change the way we think about borders and boundaries. And I really do think that both of those things are coming to a head, be it with political change or with the pandemic and the economic crisis that comes on its wake.
And so do you think that this is always the consequence? Or was it inevitable? Was it, or have we gotten ourselves into this mess?
I never think of anything as inevitable, but often we let things fester a bit too long, and then the fact that it's no longer in our control becomes inevitable. So I think that is definitely, if anything is inevitable, is because we've sort of tried to look the other way for too long while things were still manageable enough. To a very large extent, we've gotten ourselves into this, all of this, from the geopolitical mess parts of the world are in, to the systemic failures a lot of our big institutions have, to the problems a lot of big banks are having. All of it is the outcome of a series of choices or lack of choices, right? And I'm being very, very abstract, but let's pick an example close to home. Everyone who works inside a bank has actually been extremely stressed out during the pandemic, either because their loan books are over leveraged in a particular direction, or because their technology is a little bit rickety, because they their remote working systems are not designed for everyone to be remote, because you can't actually do a lot of basic account maintenance things without being either in branch as a user or in the office as a worker. All of those things were known, right? We knew there were limitations there, and conscious choices were made to invest elsewhere because we didn't expect a pandemic. So is what has happened and the strain a lot of organizations have been under inevitable? Yeah. Yes, it is. Was the pandemic inevitable in the moment in time? No. But when you have known strains and you look the other way, it's all going to come out in the wash one way or another.
It's a curious thing on banks specifically that people hold no sympathy for banks typically, but generally speaking, you don't want your banks to be in a bad situation like that. That's good for nobody. A society with bad banks is a society in trouble typically. It's going to lead to a lot of stress for everybody. So it's one of those kind of peculiar regularities that you want your banks to be successful because it tends to be a very good barometer of success within society. And as a consequence of that, some level of economic satisfaction, regardless of whether or not that actually kind of transpires as happiness or contentedness. But I think a curious thing about banking right now is that for over 10 years, over a decade, banks have been defensive businesses. They haven't been aggressive. Coming from the late 80s and 90s where banks were super aggressive and as a consequence, oftentimes very, very innovative. But their aggression led to enormous profits, which ultimately led to a collapse. And people tend to think, okay, well, look, it's better to see banks at a more of a tame pace. But the problem I think we're going to see is that we've got 12 years now of defensive banking, and the executives that have been developed or matured into senior roles over that period of time have never known an offensive or aggressive environment. All they've known is defense and cost cutting and reductions. And I don't know if banks know any longer how to succeed, which is going to be a really challenging thing over the next 10 years. And I think this is one of, when we look at economic systems over the next decade, I think very, very clearly a system right now where banks can't really make money, where there's massive wealth and income inequality, where people at the top are getting so much richer all the time, and markets are totally out of whack altogether. And then there's rising unemployment. We can't buy ourselves inflation. The Japanese central bank are buying their own debt back with QE, and we're quite clearly one of the pillars of the next decade is going to be some weird economic shift. Do you have any kind of thoughts on how that's likely to manifest?
So that's a very interesting way of thinking about it. And as you were speaking, I was sort of jotting down some thoughts. And the first one is, I agree with you that banks don't know how to be successful, particularly as I'm not sure that banks know what success should and could look like in order to even pursue it. You're absolutely right that banking has been defensive, and I don't even know whether the transition from that aggressive, opportunistic, almost cynical way of making money ceded its place to the sort of caretaker type banking we're seeing today, where there's still play around margins, play around portfolio balancing, but actually the aggression is not there the same way. The crazy chances that people were taking and the creativity or madness, depending on how you want to see it and how instruments were constructed, is no longer there. So there's definitely has been that that transition, but the transition didn't happen when everyone thought it could, should, and maybe ought to have happened around the financial crisis. It happened internally. The banks transitioned themselves for a variety of reasons. Some of them, I would say, slightly accidental, just a change of leadership. Some of them pursuing a different kind of profitability as the industry changed. And I would say that most of my career, given my age, has been spent during those years of highly defensive banking. I mean, we can have a whole conversation about the wisdom of joining a bank in the middle of the financial crisis, which is exactly what I did, because that seemed like a good idea at the time. But defensive banking had predated the crisis, and I think when we're trying to unpack the question you're asking, the first thing we need to face up to is that that defensive behavior actually predated the crisis. It was not its outcome. And therefore, it's not what will prevent the next crisis. The crisis happened within this defensive banking. And there is no simple sort of causal connection, but there's definitely connections around how we measure and understand risk and the types of risk we left ourselves open to or allowed society to be open to. But I think it is interesting that this defensiveness was inherent and internal. And actually, the regulator for a long time was a shield that banking used to justify to themselves and to anyone coming in with fresh ideas why we wouldn't do things differently. As that shield is no longer there, because particularly in Europe, but definitely also increasingly in Asia, Australasia, and hopefully one day the US, the regulator is shifting. That defensiveness has been shown to not actually serve the shareholders or the community. The regulator is expecting different things. The argument that I need to be cautious because I've got your grandmother's pension in my vaults only goes so far. Therefore, the question of can banks be successful becomes really systemic, because it throws open the question of are there meant to be competitive sort of cutting edge things anymore, or has their time passed and they just represent a utility now?
Yeah, I think if we step up then one level from banks to central banks, we now live in a world where QE is just totally normalized. And there doesn't seem to be any great consequence to it. So the US have printed out close to over $10 trillion now over the last decade, and haven't seen any inflationary pressure as a result. In fact, the people who lost money in 2008 have made extraordinary gains since then as a consequence. And I think we're maybe beginning to see now the first kind of pressures coming back from a public audience who are saying, if the government can just print out money whenever it wants to pay for whatever its debts are, why do I pay my taxes? Why should I pay back my own loans? Because the same rules don't seem to apply to government. And it seems to me that unless that changes, and I don't know how that, because monetary economics is complex, but how, I'm not sure if that's fixable. I think we've maybe like let the cat out of the bag at this point, that the current monetary system is one that is reliant on the kind of fabrication of kind of fictional money that there's no way to benchmark its actual quantity. So the supply and demand mechanism isn't really effective anymore. So we're not seeing.
Yeah. Well, yeah, you're right. So for those of us who went to school in the 80s, we were told that you can't print money and not destroy the economy, right? Inflation works a particular way. It turns out that it doesn't. Yeah. And therefore, all of those things that we knew to be true are being uncoupled in a way that is yet to be seen where it's going to take us, right? Because there is no such thing as a totally free lunch. The bill will come back to haunt us at some point. Question is when, where, and how. But I think what you're touching on, intentionally or unintentionally, I may be reading something you didn't intend to say there, is the structures we're working with are no longer inevitable. They're no longer sacred cows. They're no longer beyond question. We are seeing organizations at a pretty large scale level succeed and fail in a completely random manner. I mean, if you look at how different governments have coped with the challenge the pandemic presented them with at a systemic or sort of infrastructure or a public administration level, you can't, if you were an alien studying this for school, you couldn't really come to a conclusive answer as to whether governments are the right shape of institution to provide solutions of this scale. If anything, we've been taught that for big, large-scale problems that require coordination, size matters, and the bigger your country, the more important it is to have centralized power. well, that didn't work.
Yes, yeah, and this leads us into something. So I'm a vocal advocate for the EU. I think it is the best contemporary form of federacy because a union that is able to uh, ensure. I'm so sorry. Take a step back. I like small countries. I think small countries make a lot of sense because small countries mean that people have to know each other. You've got a real sense of collectivism and community, a communal construct. You can be quite dynamic. Small countries tend to be able to move much faster when they get things lined up as well. So there's lots of benefits to being a small country. Obviously, if you're a small country, the things that you don't have, any sort of defensive mechanism, you tend not to have much of a voice in the world, and you've got no real trade influence. So being part of a confederacy like the EU is a very effective way for small countries to mitigate some of those issues. And I think that we're likely to see kind of more of that emerge over time, but it's a wholly different form of government and kind of an evolved form of democracy that we're not used to. But we'll see. I think there's lots of talk about similar equivalents in Africa at the moment as well. So we'll see how that emerges over the next couple of decades. But to go back to one thing you said, so the idea of there being such thing as a free lunch. What if we're actually paying the first part of the bill for that now? We tend to think of it traditionally in economics. We tend to think kind of money in, money out sort of way. So if we're using QE now, it's going to result in inflation, like a monetary impact, or some form of recession, or a bubble bursting at some point down the line. So we've tended to think of it. It's all financial. But what if the scale of QE is such right now that the first order problems have been things like severe wealth and income inequality, and wealth and income inequality manifests as very, very different forms of friction, and that maybe the consequence is now it's not monetary inflation, that the QE doesn't produce monetary inflation, it produces this kind of sentiment inflation, this inflation of friction within society instead. Because there is no consequence anymore to QE. We see markets all around the world, and obviously this can stop at any time. Some big short sellers can change this, but it's going on for a decade now that markets have continued to excel, despite the fact that revenues haven't matched. So it could be the case that we're seeing it now. But moving on to the next question for you. Is there anything that your kind of contemporary themes, or some things that are happening now that you are seeing? Sorry, I asked that already. The next question is: are there specific technologies, or communities, or themes or events that are happening at the moment that you're keeping an eye on, and why?
I think we sort of touched on it very briefly earlier, but the industry we're in very much colors the trends we get to see early, right? Because as a consumer, you see what's available in the industry you work in. You tend to get earlier glimpses. And I am at the danger of dating myself really badly. I started working in finance when we had green screens and super users. Do you remember super users?
Yeah.
So for our younger listeners, the concept that you would design technology to service and solve a problem, work with the community, provide solutions. You would work with your users to design the solution, and yet you expected your technology to not only need you to explain it extensively, but to need a transition of several months for which you wouldn't be able to be around anymore. And therefore, you would need to train certain members of staff or certain members of that particular community. But particularly in banks, you would have people who would become super users for a system. And that was a year-long training commitment. That was less than 20 years ago.
Yeah.
Admittedly, I haven't heard of a super user in the last 10. So and if you need to teach someone how your technology works, the assumption now is your technology can't be that good. You need a new designer in the team. But I think there is a bigger transformation happening as part of that, because the mindset shift, and I think that ties to what you were saying earlier about whether we know how to be successful inside our industry. There's a mindset shift whereby from the Stone Age to today, there was an element of you create tools to make your life a little bit easier, but you have to work with the tool. Currently, we have tools at our disposal, particularly in our technology toolkit, that takes the labor entirely away of the consumer. I don't mean the people building the system, but the people using the system to do whatever it is they're doing almost have no need or requirement to lean into it the way a super user would have. And for me, that is the most transformative moment from a power dynamic perspective inside a society, inside a business, inside an economy. Because if now we can build tools that, sticking with the super user theme, don't require you to work around them, don't require you to adapt your life, your day, your sort of thinking around how the tool can be leveraged, but the tools are flexible enough and adaptable enough and clever enough to adapt around you, we are actually entering our first truly potentially human-centric moment in our recorded history, where everything we do and have can actually be there to support the human. From a technical perspective, for the first time, we're absolutely there. The question becomes, will we allow, permit, and enable it? Because it does create a sort of power leveling, both within and across organizations, both within and between societies. So I think as you raise the question of both what it takes to be successful in our industries, but also what do we think the next 10 years look like? For me, the biggest, I don't want to call it a battle because it doesn't feel like anyone is fighting it yet, but the biggest proof point will be whether we take all this technology now at our disposal and allow it to transform our human interactions.
Yeah, it's an interesting one. So there's this kind of rising tide of automation as well that mirrors this. But so it's kind of fascinating to see that as technology has improved, the things that we've increasingly valued have been creativity and human capacity, rather than all the jobs that were repetitive in nature, obviously, are being obviated over time, and the kind of messages continuously stop trying to be a better robot than a robot. Like the more human you can be, the more value you have, and there's something in that which is we're still trying to get our heads around, but it seems like the inexorable shift is towards we will continue to provide more value to the most human amongst us. And that will also go obviously to those who can leverage technology in such a way that it augments their humanity and possibly then begins to transcend it as we move into a kind of technologically altered state sometime in the next 10 years. People begin to integrate more technology into their being. Okay, so then when you think about, looking forward 10 years from now. So I've kind of written a lot about this recently, about how I see technology manifesting over the next 10 years and the non-linear way that it manifests and the way that technologies will change. Instead of it being a case of being able to look at AI, for instance, and then extrapolate out from now, you've got to be able to extrapolate to the first point of intersection with kind of human nature or with other technologies, and then from that point begin to nodally distribute horizons. So when you begin to consider the state of geopolitics, the state of industry, state of economic systems, the state of technology at the moment, are the things that you expect to see in 10 years that are markedly different to what we see today? And are they good or bad? Are you an optimist or a pessimist about the way this next 10 years is going to work out?
Both. Is that an acceptable answer? Both.
And it is so, explain it.
Yeah. So the first thing is that 10 years is a very long time and not long at all. So 10 years in our own lifetimes, so much happens, right? But 10 years in human history, it is rare that you look back 10 years and go, my world, the world is transformed. And yet, if I look back at the last 10 years, every single one of the challenges we're facing were there 10 years ago. But the tools we have to deal with them have changed, I would say, dramatically. And also the experiences we as individuals have changed dramatically. So although the challenges don't feel like they've shifted much, they must have done, because we've built things and learned things and done things, sometimes terrible things and sometimes amazing things. So as I look at the next 10 years, do I think that the biggest problems of our societies will have been solved much as I want them to? No. I mean, I sit in Greece at the moment as we record this. Every time you turn the news on, you see the face of human misery in the refugee camps on the islands. You see what divisive effect fear has on humans that have absolutely nothing to separate between the two of them. You see some of the worst of humanity, and to go to your earlier point, it's all avoidable. We've caused this, we've brought this upon ourselves as a species. Do I hope that in 10 years, people needing to flee for their safety will have been eradicated? Yes. Do I think it will have been eradicated? No. Do I think we will have found a better way to deal with it? I hope so, but I have no reason to expect that we will. I don't see any indication that we will. So I am pessimistic in the sense that none of these problems are new. So having new ways of solving them isn't going to help us. But I remain highly optimistic because I see a shift in people. I know that everyone loves to hate millennials, but I see a radical shift in how values driven the generation that comes after me is. People who are anything between a few years and a couple of decades younger, who will very soon dominate the workforce and the voting public, are very openly and unashamedly values driven in almost everything they do. Is it everyone? No. But it is much more prevalent and much less shameful than it was for my generation. So if you ask me if I'm optimistic, it's because of that change in narrative and discourse.
That's a really interesting point. I think, to be very cynical here, I think it's very easy to have values when you have nothing to lose. So for a generation of people that, compared to their parents, have extraordinary education, but really nothing to show for it. They have debt. They usually don't own a home. They don't own any assets. They don't have any investments. They have no savings. Their job security is non-existent. They're going to have to work until they're 70, and as soon as they're 70, they're not going to have enough money left to keep them going, because their pensions are either non-existent as well, or they're significantly reduced. So they rely on inheritance. So unless you're fortunate enough to come into inheritance from your parents, unless you're fortunate enough that your parents had wealth and not many people to give it to, you're in a really difficult position. So I kind of feel like, yeah, I do agree with you. I think that people talk about millennials all the time being values orientated. The thing of the problem with millennials as a concept, though, is that it spans about 20 years as well. It spans people who were, 15 the first time they used the internet, to people who were who grew up on Facebook. So yeah. It's.
But I agree with everything you said, but I don't think it invalidates the point I am making. And I agree with you that, and that's why I sort of hesitated before calling them that. But I do think that there's a shift that started. I'd love to align myself with them because I consider myself value driven, but I'm too old to be a millennial. There is a shift that started and is definitely becoming more pronounced. Now, I think that what you're saying is absolutely valid, and statistically, I have nothing to put forward to against what you said. The generations that come after us have less job security, less likelihood of a happy retirement, less disposable income, but that could swing people both ways. We have seen some of the worst internal conflicts in society come when people had little and they didn't want to share it. it's usually a sort of tinderbox when you can say, well, we don't have much, and that person who looks 1% different to us ain't gonna take it. And that's how most civil war and sort of communal division has started historically. And yet the language of inclusion, and I know that everyone likes to hate on millennials and those generations that come after us and calling them, woke and hypersensitive, but it was time they were hypersensitive, because it's actually hard, as we've seen, for societies to care about things they can't see.
Sure.
And I do accept what you're saying, that the shift of material goods is definitely not to the advantage of anyone who doesn't come from money. That doesn't invalidate, however, the fact that there is a public discourse is shifting. The things that are being said and valued and celebrated and pursued in public is shifting. And even if you want to be cynical about it, it does to a certain extent color what is being done, right? Even if it's done with half an eye on point scoring, it's still done differently to the way it was before.
But there you go. So like, I think it's kind of like in an Irish context, for instance, we've seen, like, I am of a generation who has now seen a referendum on marriage equality being ushered in, a referendum on female reproductive rights. There's been extraordinary progress in a reasonably short amount of time. Like, I've seen in Ireland go from a developing world nation to a very, very, very wealthy country very, very quickly, and everything that goes with that. So I think that I do agree with you in the sense that this generation are very, there's a progressiveness, a social progression, certainly kind of a globalist social progression to their point of view. Two things that kind of come to mind though. One is, I was talking to my dad last week. My dad is in his 70s, and he was saying to me that, I'm not sure even where it came from, but he was saying to me he was part of a generation that really wanted to change the world, and they really thought they were going to change the world. And they did, but for the worse as far as he was concerned. Look at the world now and look at everything they've done to it. It was his generation that needed to take responsibility for what was done. And he was saying it to me, and I kind of couldn't help but feel instinctively that this generation, the millennial generation, is going to do far, far worse. And I think there's this, partly because we've cultivated a sense of perception that's so necessary now. Everybody needs to be perceived to be doing the right thing, regardless of where their intent actually lies. So social media has created a mechanism through which alignment has become vital, and association and affinity with certain points of view are necessary, but not all the times genuinely held. So people know they have to behave a certain ways, and they're very, like, the generation is very fluent and clued into that. So the idea of being woke as a general concept is not a burden on most people who are millennial, because they know you don't talk about certain things in a certain way. You do talk about certain things in a certain way, and that's necessary colloquialism of the time. I don't think it always actually goes to internal principles that they have. And when principles really come to bear, I think is when we're talking about creating policy, or when we're talking about corporate executives setting strategy and the decisions that are made. And I think we see plenty of examples from within millennials all the time as well, that, think about a lot of the startups in Silicon Valley, for instance, that are some of the most prominent kind of millennial personalities in the world. A lot of the people there at the very top of that. And if we look at celebrity culture as well, there's not a whole lot of principles being exhibited. For every Greta Thunberg, who's not actually a millennial, I mean, for every Greta, there's 1,000 examples of people that once they were given money and power, they behaved the exact same way as every other human with money and power for the last 10 millennia has behaved. So it's a really good one. I am fascinated to see how it plays out.
You're absolutely right. And I think the main thing to take away from that is there is no universal. There's absolutely no universal, right? And you're absolutely right that there are some absolute choice creeps in the millennial generation, and a lot of people who are just riding the wave, and a lot of people who couldn't care less. The point I'm making is not one of universality and one that sort of seeks to sanctify anything that comes next. But I do believe that predominant culture and predominant narratives matter. We all look back on some of the horrors of our history, including the run up to genocide. I mean, I'm over dramatizing here, but the run up to genocide, one of the biggest takeaways that we've had as societies is that what it takes for evil to triumph is for good people to do nothing, right? And why do you do nothing? Because the predominant narrative is too scary, too powerful. If we live in a world where the predominant narrative is be kind, be inclusive, don't be a dick, then even if not everyone does it because they believe in it, I'm kind of okay with it.
Yeah, it's, I mean, you've kind of touched on something that I want to think about further, but it's kind of, all these systems are interlinked. And like I often say, I think wealth inequality and income inequality are the two real, outside of climate change, they're the two real social challenges that we need to fix. And if we fix those two things and made them more reasonable, I think we would see an awful lot of the other issues that we have kind of abate. The problem I think that I see at the moment is because we've created an infrastructure, a societal infrastructure that requires inheritance in order to advance in society. So if you are, if you're an employee living in Europe somewhere and you're in your 20s and you're earning 100,000 euros, so you're way above average wage.
That's way above average.
Way above average wage in a European country. You're still not going to be able to ever buy a home in a city center, in a Western European city center. Like, that's just not realistic. You can buy a studio apartment or something, that's fine, but you're not going to be able to buy a €1 million home somewhere because of the cost of renting across most cities and all of the ancillary costs that go with life now and starting a family, whatever else. So I think that what that leads itself to is this tacit understanding that inheritance is now a necessary part of social mobility. And that for a generation that are coming into it now, if they can accrue wealth and assets, that they will want to make sure that their kids have the best chance in life by ensuring that their kids can inherit those assets, because inheritance becomes such a fundamental part of social mobility. And I think that's a really, really problematic and flawed construct, but it's not something which has traditionally existed. So inheritance has always been beneficial. Look at the President of the United States, but it hasn't always been necessary. Sorry, when I say that's totally, let me take that back. For millennia, it was absolutely necessary. But in the modern world, so post-World War I, enfranchisement of people, and then 5-day working week, introduction of the pension, and then we move into the middle 20th century. Since we've kind of seen the real rise of the social contract between labor and capital, this has not been something, the promise was always social mobility both ways. We've now reached a point where social mobility both ways is very unlikely.
Yeah, you're right. And I guess the point you're making is, if inheritance is the key to mobility, to social mobility, then there is no social mobility.
Indeed. And I think that's what's going to kill this generation.
Do you think we're going into another sort of cycle of attrition where essentially capital will become key to the success of future generations, as it was, as you say, for millennia, until it's fragmented to such an extent that it's not an option anymore, so people have to bootstrap all over again? In which case, we're looking at generations before that happens.
I mean, a massive oversimplification of this, I think, but if we are now seeing the deconstruction of the existing social contract between rich and poor, services of capital and the owners of capital, because we're seeing technology like AI and automation and robotics replace a lot of the need for manual labor and military labor in particular, we begin to see ourselves enter a period where the rich don't need the poor for a lot anymore. Why should
because
the rich?
Because of the automation and the technology.
And they own the capital, they own the IP, and it's legislatively protected. So why then would there be any inclination towards heightened levels of social welfare infrastructure, for instance, or improvements to that, or that sort of advancement, when there's just no motivation for the rich to do so? And when you've got a situation where the rich generally, even in developed world countries, also control legislation and regulation through government and through lobby interests, and also through the individuals who are in politics, are typically people from wealthy backgrounds as well. You have a situation where, and secondly, when you can also determine how much money exists in the economy through quantitative easing now. So when you have a mechanism that you can actually make the wealthy wealthier and you've got a legislative system to protect that, and you've got no incentive to balance rights and responsibilities between rich and poor, and you've no reason to guarantee social mobility, my kind of reflections on history would suggest that it is very unlikely that we see philanthropy across large groups. Philanthropy tends to be an individual pursuit, and as a consequence of that, I would expect that over the next 2 decades, we're going to see a breakdown in the social contract that is going to disadvantage the poor in a very meaningful way.
There is a big part of me that fears you're absolutely right. There is the part of me that is an incurable optimist that says that, I know, right? That says that the last cycle of sort of inheritance-based progression came before the representative democracies of the post-world era were the norm. So in terms of sheer numbers, the disadvantaged will always outnumber the rich. Before I finish that sentence, I am well aware that historically, statistically, the poorest members of society tend to vote against their interests with alarming regularity in every society that has any data on the subject. And that's a huge discussion on why people do that, but it is a statistical fact across all geographies that the poorest members of society tend to vote in a way that is misaligned to their own interest, which undermines my own argument. But it does give us hope if I am right about the transformative power of the discourse of the next generation, and also the fact that historically we have seen leadership that puts humanity first. You know, they're just to think at, not often actually, I have very few examples, but the abolitionist movement or giving women the suffrage fundamentally came when a couple of people decided they don't stand to benefit from the change they will champion, but it's the bloody right thing to do. Now, is that enough to outweigh what you described? Not in terms of sheer statistics, but it might, if it happens, then it is enough. Yeah,
it's like I as an Irish person, I'm probably genetically bound to be both pessimistic and have a natural mistrust of anybody in authority. But let me wrap this up by bringing it back to banking for a minute and give you an example. So one set of figures I love to quote is that in the UK over the last 20 years, sorry, in London over the last 20 years, a place where you currently live and where I lived for a long time, we saw the average income increase by 45% in 20 years. The average house price in London over that same period of time increased by 540%. And the average executive salary in that period of time increased by over 1,350%. Now, it doesn't take an economist or a mathematical genius to realize that the wealthy who are benefiting enormously are pulling up the price of houses quite significantly, wealthy domestic wealth and international wealth. And as a consequence of that, we've seen the average mortgage length increase and increase and increase and increase. So like, what would have been maybe a standard 25-year mortgage for people 35, 40 years ago is now oftentimes for a lot of people a 35-year mortgage now, and in more and more cases, 40-year mortgages. And I would expect that 45-year mortgages are just around the corner in certain places. And I think that we're getting very close then to the idea of debt for life, or a kind of a modern form of indentured servitude against the debt on your living, your accommodation, if you choose to own a place. And I think very soon, if it's not corrected, we'll live in an environment where only people in the kind of like the middle class and upwards will ever be able to afford a home, and that's going to create enormous segregation, I think. And I don't know what you feel about that, but like, I know that's not the part of the bank that you typically work on, but I think clearly mortgage terms and mortgage limits have increased at an extraordinary rate over recent decades.
I agree. It's not the part of the bank I work in, but as one of my mentors at BNP Mellon kept saying, money is connected, and any banker who works in a particular side of the money life cycle and doesn't know the rest can't do their job properly. So we all have a responsibility to appreciate and understand how things are connected. And I'm going to give you a bit of a cop-out answer, because look, I feel the problem you're describing is global. As I said, I'm currently in Greece with my family, and Greece has had a sociological phenomenon called the 750 euro generation, which is a generation of people who are nearing 40 at the moment, and whose salary before tax is on average 750 euros in a country where a coffee costs €4.50. It doesn't take, as you say, a mathematical genius to work out that the living expenses versus take-home pay means that most of these people will never buy a home, will not be able to move out, will never, unless there's an inheritance piece or parents helping out, which is exactly what's happening. And you're seeing a whole country moving back to intergenerational households, and just rapid sociological change essentially dictated by these monetary terms. There is a connection here, and I don't want to sound like too much of a rebel, but there is a connection here to the question we were exploring when we started this, that banks did a thing and did it very well for quite a long time, but that thing is not profitable the way it used to be. Now, each banking product is trying extremely hard to become, remain, retain profitability. Use your verb of choice. It varies by product. When you look at banking products, it's not actually about retaining profitability anymore. It's about regaining profitability if you can. But in trying to regain profitability in what, in the sort of grand scheme of things, might be a losing battle to the conversation we were having at the beginning, you're causing some pretty profound social ripple effects that go much, much beyond the share price of your bank. So if we are looking at the work and infrastructure and sort of service that banks offer and say, the way we used to do it doesn't work. The way we can and should do it from a regulatory perspective, from a moral perspective, can actually be much cheaper to run because, hey, new technology, and can be, as a result, much cheaper for the consumer. And if added as an extra layer to this, our old models of profitability don't work very well with the current economic climates and don't travel very well with the way value travels these days. And in pursuit of extending the lifespan of our existing business models, we're actually causing sociological distress. Isn't there an opportunity from a regulatory perspective, because banks won't do this to themselves, to step in and say, it's not just that your service is a utility, it's that you need to start thinking and behaving as a utility. And if you were to do that and say, okay, you're going to have to provide the service in a certain way, in a particular manner, for a particular cost, and in a particular I was going to say in a particular location, but by that I don't mean geography. I mean, in fact, that you would probably need to move beyond those constraints. There is a way to turn the problem on its head and say, well, we've come to the end of a chapter. We can't fix our own problem, and in trying to fix our problem, we're causing other problems. The way to do this in a way that solves problems is there, it just won't make as much money. Will banks decide to do that to themselves? No. Can societies make that happen for themselves? Only if they create cooperatives, and that's not the way things are going at the moment. But the regulator might step in and do that. The regulatory provisions around unbundling pricing and unbundling products and creating accessibility to the language of what it is you're buying and keeping pricing under control shows that the direction of travel is to protect the consumer, to force the hand of institutions in using technology to do what is possible and not just what is profitable. the mathematics of what you described is inevitably obvious, it will be interesting to see whether communities such as the EU will say, well, the long-term impact of not doing something radical now might be too much on our societies, and essentially take things like mortgages out of the equation for being a source of profitability for banks and being a hygiene factor.
That'll be interesting. Very interesting. Well, look, we have run significantly over time as usual, so I'm going to close it off there, Leda. Thank you very, very, very much for having a chat with me again. I've always enjoyed it. And
Same here.
Until next time, thanks again.
Talk to you very soon. Thank you for having me.